the new data that changes everything about rate cuts. Hey everyone, Scott Kuru here, and the latest data has just dropped and it changes everything. I'm going to share it with you. There's a lot of data points here. Stick with me through this video. This is going to change the way you look at the property market forever. A few weeks ago, everyone thought the RBA was done cutting rates for this year. Inflation was heating up again, the economy looked steady, and the market said, that's it, the RBA's finished with rate cuts for 2025. But new numbers have actually just come out that are actually going to flip the script, and I want to share those numbers with you now. And it's now forcing the RBA to actually rethink everything, including when they'll move next and how deep the next cuts could go. So if you're a homeowner or investor, hang on, because in this video, I'm going to break down what the latest data says, what the biggest banks are now forecasting, and what the top economists are expecting next. Let's get into it. So the new figures just came out and they caught almost everyone off guard. For months, the RBA has been saying the economy is holding up fine. Unemployment was meant to stay low. Inflation was steady, and the plan was simple: no rush to cut rates. But the latest update from the Australian Bureau of Statistics paints a very different picture. According to the latest ABS data, Australia's unemployment rate rose to 4.5% in September, up from 4.3% in August. That's the highest level since 2021. And while it doesn't sound huge, a 0.2% jump in 1 month means 34,000 more people are now out of work. The RBA wasn't expecting this. Their own forecast said unemployment would peak at 4.3% and hold steady until 2027. But we've already blown past that. Even the underemployment rate, people who have jobs but can't get enough hours, has climbed to 5.9%. That means more Australians are struggling to find full-time work. So while the total employment technically rose by about 15,000 people, the quality of those jobs is actually falling. And that tells us one thing: the economy is slowing down faster than the RBA expected. Remember, the RBA's mandate really is two things: keep prices steady, keep inflation steady, and keep unemployment low. So what does this all mean for rates? The latest survey from the Australian Financial Review shows that 23 out of 39 economists still believe the RBA will cut rates again next month, bringing the cash rate down to just 3.35%. And it doesn't stop there. Most major institutions, including Westpac, Rabobank, and Yarra Capital, now expect at least 2 more rate cuts between now and the middle of 2026. Westpac's chief economist, Lucy Ellis, has even said inflation is already within the RBA's target range and could move lower next year, which means the RBA will eventually be forced to act. So despite the noise, the experts are still saying one thing: the next move is down, not up. But before you get too excited, there's a reason the RBA isn't jumping just yet. Inflation is still sitting around 2.7%, just above their 2.5% target. It's close, but it's not where they want it. And Governor Michelle Bullock has been clear: they're not going to move until they're sure inflation is under control. That's why the RBA is being so careful right now. They're trying to balance two big problems: rising unemployment on the one hand and stubborn inflation on the other. This is a tightrope. One wrong move could send either inflation or job losses spiraling out of control. Now, for homeowners and investors, this is where things start to matter. If unemployment keeps rising and inflation continues to ease, the RBA will almost certainly step in. And when they do, rate cuts will arrive faster and possibly go deeper than the market actually expects. That means borrowing power will go up again. And when that happens, demand floods back into the property market. That means more competition, more bidding, and yes, higher prices. So if you've been sitting on the sidelines waiting for the bottom of the market, we have already passed the bottom of the market. The next move will only heat things up again. Now, let's zoom out for a second. Australia's economy isn't crashing, but it is slowing, and the RBA knows it. Growth is expected to tick up only slightly over the next year to around 2.2% by mid-2026. That's steady, but it is soft. The risk now isn't inflation, it's stagnation. Too little growth, too many job losses. And that's exactly why more rate cuts are still on the table. So here's where things stand. The latest data has changed the outlook completely. The RBA is still cautious, inflation's still sticky, but unemployment is rising, and that changes everything. 2 more rate cuts are now on the cards, maybe even 3 if the slowdown continues. So for homeowners and investors, this isn't the time to switch off, because the next move, whenever it comes, could reshape the property market again. So right now, all eyes are on October the 29th. That's when the new inflation figures come out, and that data will tell us everything about what the RBA does next. It'll either confirm a November rate cut or push it back even further. So wait for that update because it's going to be a big one. And if you want to stay across every development as it happens, make sure you're watching the daily property update. I break this stuff down in real time so you always know what's coming. Plus, I write 4 in-depth articles every week on the Australian Property Update website. They're completely free and they'll help you stay ahead of the market, understand the data, and make smarter investment decisions. So if you want to be a property insider, hit like, subscribe, and go check out those articles. And I'll see you in the next update. If you enjoyed this video and want more information about the RBA and what they're planning and what's going to be happening in the property market over the next couple of years, check out this video.